Chief Market Strategist, BNP Paribas Asset Management, now joining into this conversation. Daniel, I'm sure you must be working the phones, talking to your clients. But, the key question, which Chris Wood, in fact, mentioned in his report, is that there could be an intra-meet by the Fed in order to assess whether they should cut rates. Is that a possibility?
Well, certainly, but I think we want to have a little bit of perspective here. Certainly the markets have moved a lot, but number one, it tends to have been those markets that were already up significantly this year. And if you look at the year-to-date returns as of today, those numbers are actually still quite good. And you can imagine that if it had been a straight line from January 1st to this level today, without the volatility, frankly, a lot of investors would be quite satisfied with those figures. Secondarily, even if the non-farm payrolls labor market data in the US was a bit disappointing, we're really not seeing other economic indicators at all pointing to a recession. And also keep in mind that the labor market is a lagging, not a leading indicator. So we really want to be looking more, say, at PMIs to get a sense of how well the U.S. economy, at least, is doing.
Right. So what's your view on the impact that, the JPY US carry trade unwinding is happening? I mean, a lot on the street were anticipating that. Now that it is happening, would you be able to quantify the sort of impact?
Well, I think it's quite clear when you look at the Japanese equity market. And one of the worries that we've had so far this year, and one of the reasons that we've had a neutral rating on Japanese equities, was the worry about the vulnerability of the currency. And if anything, the currency had continued to weaken, even as the Bank of Japan had tightened rates, which seemed a bit surprising. We had expected the currency to strengthen sooner. Now it has in a very significant way. And then as anticipated, the impact on the equity market is quite large. And it's that uncertainty really around the currency that remains without question the fundamental issue for Japanese equities.
Okay, Mr. Morris, what's your in-house estimate of how much more the dollar can fall?
I'm sorry, can you repeat that? That sounds a bit low.
Yeah, what is your estimate in terms of where the dollar index could move, or how much could it correct?
Well, certainly no estimate on the degree of the change. I mean, clearly it's going to depend on primarily on the economic data. If we think broadly the strength of the dollar that we've had so far, it's been premised on a growth differential, certainly say relative to Europe and much of the rest of the world that was in the U.S. favor, interest rate differentials with the Fed. At this point, being relatively late to the game, if it comes to cuts in September, those will be the key factors. I mean, really, we're going to be looking for what kind of communication we get from the Fed. For example, would there be a meeting before September? Would they envision a 50 basis point cut? That'll feed through the dollar, and that's going to be the key factor.
But would you believe that there could be sell-off of EM markets like India as well? By global funds, or do you think that may come? I mean, can there be a growth scare in countries like India?
To be honest, for India, I think it would be less a growth scare. People have been talking about valuations for Indian equities for a very long time. Nonetheless, the market kept going up, and if anything, recently, compared to many other global markets, it still performed relatively well. But I think now that question is going to become much more pertinent to investors when they see a much less supportive global environment for risk. Markets with high valuations are going to be one of the first things that they look at.
Right. Just a final question before we let you go. Typically, the order of action from central banks usually is commentary number 1, open market operations number 2, and then perhaps rate action number 3. What kind of possibility do you ascribe to a mid-Fed meeting cycle cut? I mean, are you in that camp?
At this point, no. We are anticipating a single cut in September. And then another one in December. But, obviously when the facts change, sometimes you do have to change your view. But at this point, that's our expectation through the rest of the year.
Okay. All right, Daniel. Thanks very much for joining in and speaking with us. So no intra-meet rate cut expected from BNP Paribas Asset Management. They do expect the Fed to probably cut rates in September and then in December. We'll take a short break. And on the other side, we'll get you more details on the markets. But before that, we do have another macro call. We'll take a break and we'll be back with more. Stay tuned.